Hey guys, welcome back to my channel. So today I'm going to be talking about getting approved for a mortgage, the steps to getting approved. So you have what they call your pre-qualification, pre-approval, approval, and then you're clear to close. Okay, so when my husband and I applied for a mortgage, once we, mind you, we went through our builder's mortgage broker, who then matched us with a lender. Okay, so in the beginning, when you are getting pre-qualified, okay, what happened with us, we received a phone call from the loan officer, and basically they just asked questions. How much do you make? How much do you have in your 401k? How much do you have saved? And do you know your credit score? How much debt do you have? Okay, they're jotting all of this down and they come up with a figure. Okay, based off of everything that you told us, you qualify for X amount of dollars for a house. Okay, and there are some online tools that you can use as well to see how much you qualify for. Mind you, this is all based off of what you're telling them. They are not verifying anything at this point. Okay, so we got the information right away during the phone call. This is how much you qualify for. Okay, right. Then they ask you, okay, do you want to move forward? Yes. Now we're going into the pre-approved phase. So we had to give them permission to run our credit. Okay, so they ran our credit. They got back to us in a couple of days and told us, okay, we ran your credit. This is your credit score. We looked over your credit report, your credit history. Now, based off of that and what you told us as far as your income, you are now pre-approved. We can move on to the next step, pre-approval. Okay, so you're now pre-approved. Your credit is fine. And now in order to approve you, now we need documentation. Okay, so at this point, they created an online account for us with their company. Okay, and basically they'll send us emails saying, hey, this is the documentation we need. We'll scan it, upload it into the online account. They pull the information from there. And this is just so you're not running up to the office every time they need documentation or you're mailing it. Everything is done online. Okay, so now they're asking for pay stubs. Now they want to see if you actually make the amount that you make. Okay, so we had to send them pay stubs, bank statements, all of your bank statements. So however many accounts you have, savings, checking, all of that. We had to send them the statements. We had to send them our 401k statements. And the previous 2 year of your tax returns, your W-2 forms, all of that we had to send. Okay. Now they're looking at your credit report even more. Okay, because now what they're trying to do is they're trying to determine your debt to income ratio. Basically, they're looking to see how much debt you have out there, and based off of your income, okay, and all of your assets, can you afford to continue to pay all of your debt on time as well as a mortgage? Because what they don't want is, okay, now you have this mortgage and you have all these bills, and so one of them is going to suffer. They're trying to make sure that you can do both. Okay, so they're looking over everything with the fine-tooth comb. At this point, they are asking you if you have things on your credit report. Let's say if you have late payments, missed payments, charge-offs, collections, liens, judgments. They're also looking to see if you have other loans out there, car notes, student loans, foreclosures. They're looking at all of that. Okay, number one, they're looking to see if they can trust you with a mortgage. You know, what is your credibility? You know, are you a good candidate to pay a mortgage and pay it on time? Okay, so they're looking at all of that. They're looking at your income. They're looking at your assets, whatever. So Now is a time where they're asking you to justify. All right, so let's say for us, with the bank account, they're looking to see your spending habits. They're looking to see if you made any big purchases. They're looking to see if you have any outlandish deposits. They're looking at all of this stuff, you know, because they want to make sure, they want to see if your bank statement, if your deposits are strictly from your job, or if there's some outside source that's depositing money into your accounts. They're looking at all of that, okay? And if you had, like, we had a charge on the bank statement. At the time, my car had a keyless remote start, so and they went bad. So my husband bought 2 more, and you have to get it from the dealership. So of course we used the bank card. That charge was on my bank statement, on our bank statement, and I had to justify that. They asked me, they said, hey, we see a charge on here from a dealership, $450. What is this for, and do you have the receipt? Well, luckily, because I keep everything, especially when it's dealing with cars, when we get cars repaired and anything we buy or dealing with cars, I have a folder and I keep everything in there. So I had the receipt. I had to make a copy, send it to them, let them know, hey, this charge is for you know, keyless remotes that I had to get replaced. But they didn't question things like, say example, Walmart. Because we would do our shopping, like grocery shopping, and, you know, picking up knickknacks and stuff like that for the house from Walmart. So our Walmart bill would be, you know, $300-400. They didn't question that. They questioned something that they saw from a dealership. So I don't know if they thought, could this be a car payment? I don't know what they thought, but I had to justify it. If you have anything on your credit report, let's say you were late on paying some things, and it happens to all of us, you have to justify it. They're going to ask you, why were you late on these payments? And there's a form you have to fill out, basically explaining, and we're talking about accounts years old. Okay, so you're trying to figure out what the heck was going on at that time that I missed 2 payments, you know. So you have to do all of that. All right, so once they look at your accumulated debts, once they look at your credit history to see how you paid on your debt on time, missed payments, collections, whatever, they look at your income and they look at your bank statements to see how much you have saved. At that point, they determine whether or not they are now going to approve you for a mortgage, okay? So I would say a week went by, maybe 2 weeks. They gave us a call, as well as sent us an email congratulating us on being approved. You are now approved for a loan, okay? So the loan officers that we dealt with, I think it was 4 of them, because they all handled different parts of the approval process. So they called us up and was like, okay, you're approved, everything looks good. Now is the time where you need to watch your P's and Q's, okay? You guys don't realize how much your credit score can fluctuate. So, you know, thankfully, before we even applied for a loan, we paid down our credit cards. Some of them we paid off. We did not close the accounts. That's very important. You can pay your credit cards down, but do not close them, okay? So we had everything paid down. They were like, listen, you know, don't start charging things. If you charge something, make sure you pay it off right away. Don't make big purchases, you know, because every month now they're looking at our bank statements. Now, mind you, this is when you're building. This is when new construction. There's a 6-month period, okay? So if you're buying resale, you're buying your house like what, within a month or 45 days. So you may not have to do all of this. You know, you're showing your bank statements one time, maybe twice, and then you're good to go, because now you're in your resale home. When you're building, there's a 6-month period on average, okay, from the time that we put a deposit down on our lot to the time that we close. It was from January to June 26th, okay? So from over that period, we were giving them our bank statements like every 30 days, you know, because they have to make sure you still employed. They have to make sure you still have money, you're still saving. They have to make sure that you're not out there just spending money and you don't have money for closing and things like that. So they advised us, hey, you know, just make sure that you're not spending lavishly, you're not charging up your credit cards, you know, make sure that you're not applying for new credit and things like that. Basically just chill and lay low, okay? So that's exactly what we did. We lay low. We did not make big purchases. We budgeted. We try to continue to save. And because at this point you don't know how much your closing cost is going to be, none of that, you know. So at this point, that was it. We were no longer hearing from them because it was just waiting. It was a waiting game, waiting for the house to be finished, okay? So the closer we were getting to the end, towards our closing, our builder had now, after we picked out all of our finishings and upgrades and all of that, now we had a figure as to the final price of our house, because you have your base price and then you have your price where after you've picked out everything, okay? So they had to submit this information to the lender, all right? So now the lender is looking at this and they're trying to configure how much you know, your closing cost is going to be. They're trying to estimate the taxes, all of that. So they send us a sheet with everything broken down, and they're telling us this is how much your monthly mortgage is going to be, okay? If you roll your closing costs into the loan, this is how much it's going to be. This is how much it's going to be if you don't. This is how much you need for closing, all of that good stuff. So we chose to roll our closing costs into the loan. So the lender paid for our closing costs up front and just rolled it into the loan. And they told us how much we needed to come to the table at closing, how much we needed. And you had to have that amount in your bank account. They needed, and they tell you, you need to have this amount in your bank account at all times, okay? So 2 months went by, 3 months went by. Now they are pulling our credit again, because again they have to make sure that you're not out there, you know, going hog wild. They pull our credit report again. We had to send everything we sent before, we had to send again, other than our tax returns, because, you know, we hadn't filed again at that point. So bank statements, all of that, we had to send them again. They got it. They looked over everything with the fine-tooth comb. And now, a week before, because it goes to underwriting, okay? And this is where they are looking at every single thing, okay? Anything that the loan officers missed previously, they are calling it out, okay? So a week before, we already had our closing date. We already had the letter saying how much we needed to bring, all of that. A week, maybe 2 weeks prior to closing is when we got our clear to close approval, okay? Clear to close means you have satisfied and given us everything that we've asked you for. Everything looks good. Your credit, your income, your savings, your tax returns, everything looks great. So now you are clear to close. There's nothing else we need from you. Let's go to closing. Bring your check. Here are your keys. You can get your keys and we're done. Okay? So that was it. So they sent us the letter plus an email and a phone call telling us that we were clear to close, and that was it. So again, this is dealing with when you're building a house. It's over a 6 months period that you're going to have to supply this information more than once. I'm only speaking on when you are building a house, because there is a time lapse from roughly 6 months, okay? Yeah, so that's it, you guys. My advice and my tips is, when you have made the decision to buy a house and apply for a loan, I advise you, prior to doing so, make sure that you're checking your credit. Make sure that you're looking over your credit report to make sure there's no errors on there, because you want to take care of that before you dive into the mortgage. Because if not, they're going to have you fixing it during that time, and that may delay your approval process. Make sure that you're paying down your debt. Make sure you're paying down your credit cards, okay? Do not close any accounts at this time. Just pay them down or pay them off, but leave them open, okay? Save as much money as you possibly can. Do not go out there making large payments, large purchases, because they are going to see this on your bank statement and you have to justify it. Hold off on buying the new car and big items and furniture and all of that. Just hold off and chill, okay? Start budgeting. So the eating out every day, the buying lunch out every day, just relax on that. Put that money in savings. It always looks good when you have money saved up, okay? And that's it, you guys. It can be very, very overwhelming. It can be scary because you don't know exactly what they're looking for. So I hope that my tips and explanation and the breakdown of what we went through, what we had to provide, help you guys a little bit understand the process. So I wish you all well in your journey in home ownership. And until next time, take care.